Good evening, everybody. My name is David Matney with Nebraska Realty here in Omaha, Nebraska. Welcome to the live stream. If you can hear me okay, if you can let me know in the chat, and we'll kick things off. I got a great show for us tonight. I got a special guest, um, someone that I have known for a long time in the mortgage industry, uh, a fellow by the name of PK Kopun. And I'm going to bring him online so he can introduce himself. Hey, PK, how you doing?
Hello, David. Doing great. All right. Good here.
All right, terrific. Well, I'll tell you what, I really appreciate you being on the program tonight.
My pleasure.
And hopefully what we'll do this evening is I prepared some questions and just kind of going through the lending process and kind of hopefully give, you're the subject matter expert on loans. And I thought I would just come up with some questions. And if anybody has any questions in the chat, let us know. And then we'll go ahead and kick things off. But PK, first, before we get started, tell everybody a little bit about yourself and, a little bit about yourself and where you work and all that sort of good stuff.
All right. Thank you, David. My pleasure. I go by PK. My real name is Predrag, but PK works best. And I have been doing home lending now since my first loan that I learned how to do since 1994. And then It just took off from there, a little slow, but then it accelerated. My wife and I want you to know this is really meaningful to me. My wife and I bought our first home in 1988.
Wow.
And we were first-time home buyers, and we were very excited about making that transition from renting to owning our very first home. As you can see, I feel that excitement to this very day each time somebody get into their first home.
Yeah, that's fun.
Exciting.
That's fun to see. That's fun to see.
Absolutely. It's a new chapter. It's a new set of adventures and opportunities and mowing the grass.
And things have really changed from way back then, from 1988. And then just out of curiosity, what was the interest rate back in 1988? Do you remember?
Sure. We got a great deal with the first-time home buyer program at 11%. Yeah, we did. Yeah.
Oh, that's awesome. That's awesome. Well, hey, I got some questions, and this is just going to be, we'll kind of break it down to different categories. And the first one is kind of under general lending the general lending process. PK, can you walk us through the mortgage pre-approval process?
Yes. Let's talk about that. That is hugely important anymore, and in our market. Back in the day, not so much, but it is very, very important right now. And how we begin this process, I just tell everybody, including today, several times today, the very first part that opens the door to the whole process is you need to apply. A person needs to put in their application. That starts opening the doors for them and for us to exchange information so that we know how to advise them going forward. Nowadays, mostly since 2020, we give people options of how they want to put in that application. It's become very popular and very easy and convenient, David, for folks to just apply online. I like to send them a link in their email. They use that. They click on that. They fill out an application. That has become a very common and popular method amongst everybody. I also take applications over the phone. And of course, I also invite folks to come and meet me at the office, and we'll do an application there together. But that's how the pre-approval process starts. It's an exchange of information going both ways. The better information the folks provide to me, then the better advice I'm able to give to them.
Gotcha. What's some of the things that they'll need to have to do the pre-approval?
That's a good question. Well, the application asks for all the basics: name, address, social, where you work, what your income is. But at the application online, it also gives you an opportunity to upload the most important documents, which are typically W-2s, pay stubs, and bank statements. We absolutely got to see all of those, and they can upload those, or they can email them by secure email. We have options like that. That's really important.
Now, in terms of the pay stubs, is it the last 2 pay stubs, or is it what about bank statements? Is it like how far back do you go? Is there anything in particular that you're looking for in terms of the statements and stuff like that?
That's a good question. Typically, pay stubs are the last 2, unless somebody receives a weekly paycheck. Then we need 4, because there's been 4 in a month. So it's like last 30 days worth of pay stubs, whether that's 2 or 4. And the bank statements is most often 2 months, last 2 months of bank statements. Where people forget is they send me a page and say, here it is. No, all the pages, every single one. And they're numbered too. And it doesn't matter whether you think the information on there is important or it isn't. If it has a number, page such and such, then we need all the pages every single time. There are no exceptions and there are no shortcuts. Just the nature of the beast. Not to mention, forget one more thing, 2 years of W-2s. W-2s. 2 years.
Okay. What about if a person's self-employed? What do they have to do if they're self-employed? How tricky is that to navigate that?
I'm sorry that it's tricky, but it is. It involves 2 years of tax returns. 2 years. And not a page here or there, the tax returns.
Right.
Both business and personal, if there are 2 different types. Mm-hmm.
And if somebody is self-employed, they got to do a lot of prior planning in terms of taxes. If they're planning on buying a home, because people are good at writing things off and all that sort of thing and showing very little income. If they are self-employed, they need to really plan way ahead on that, don't they?
Oh yeah, that's a good word and good advice. A simple little rule is this: when you're self-employed, you don't want to show declining income. You've got to show that your income is going up from year to year. So your income, when you're doing your 2024, for example, tax return, it should be more than it was in 2023. That's just a simple rule, and it's best handled that way if at all possible.
Okay. Now, can you kind of go into the difference between, there's a lot of confusion out there between pre-qualification and pre-approval. Can you kind of go through and kind of explain how that works?
The way I see it is like this: the pre-qualification is an exchange of information. A lot of things that we do is automated. Mm-hmm. Our pre-approvals can be done automated, and they're based on just the credit report and what people tell me. This is my income. These are my assets, and we put it into underwriting engine, and it gives you an approval. Piece of cake, but nothing is really, really verified. So that leaves room for, as it gets verified later in the process, to create problems or traps, as I call it, because nobody saw it. So pre-qualifications are easy, and it's an idea that, hey, yeah, we got potential here. This can work. But whereas pre-approval at Centris, we only do pre-approvals because we want to verify everything right from the start so that our pre-approval letter is solid. You can count on it, that it's been verified. The income has been verified. The assets have been verified. We are really good to go, and we really have a qualified buyer. That's how we like to do it, just to make sure there's no unpleasant surprises down the road when we're excited about getting into a house. So.
Right. All pre-approval letters are not created equal.
Correct.
Yeah, that's how long does the loan process typically take from application to closing?
That's a good question. I like to say is that it depends on how much complexity the buyer brings to the table. If we're just, so it just depends. But typically, a person can start the process and be in the house at as soon as 3 weeks. Typical turnaround, the whole from start to finish is 30 days. That's just the most Typical.
Okay. And what do you think is the biggest mistake that buyers make when they're applying for a mortgage?
When they're applying for a mortgage?
Right. Or during the process, elaborate on that a little bit.
My least favorite is, we found a house. We got to have this pre-approval letter right now. Doesn't matter that it's Saturday night, Sunday morning.
I know.
We got to have it right now.
Right.
I believe that when you put people under a rush, then you open yourselves up to errors or speed and haste and things like that. So it's always best to be pre-approved first, to go in prepared to look for a house rather than the other way around. And then people are not always prepared with these documents you and I mentioned earlier. They got to go look for them, find them, takes time, and they don't get them to us on time in a timely fashion. So
right. All right. MH08. I was self-employed when I got my first mortgage. I fogged the mirror. Okay.
Thank you for the memories. Those are memories.
That has changed, has it not?
I'm afraid it has changed. Yes, but
now back, way back when you've been doing this since, was it 94? I mean,
something like that. Yeah, 90s.
What was that? The process as a mortgage officer or loan officer back then? What differences were in place then? Did you do all this was it all paper and files and all that sort of thing? Or, I mean, it wasn't nothing electronic back then. It's so much nicer now.
You said it, David. A lot of it was on paper. A lot of things were a lot more time consuming. There was no such thing as instant credit report or an instant cost worksheet, an estimate. Everything took time, took longer, and you just had to basically wait. And that was acceptable because that's how it was. We just didn't have the level of technology that we have now, where everything is a lot faster and instant. So, things have changed. I remember being on paper.
All right. Clark has a good question. What if a person is a veteran? They may move around a lot because of the military and want to purchase a house. What does the time length job-wise need to be possibly to get approved? That's a good question.
That's a very good question. The standard procedure is that they are looking for 2 years of employment. And I mean steady employment. It's the gaps of employment that cause problems. 1 month, 3 months, 6 months. But if we have 2 years of steady and verified employment, that usually works. But they will also ask if there are multiple job changes as to why all these job changes occurred. If that answers your questions.
What about industry change? Does that matter?
It matters, but not so much. Again, as long as the employment is steady and continuous. Since you're on the subject, can I just interject? When you said industry changes, here's what doesn't work, and it has happened, so I want to mention it. What doesn't work is, here I was getting a paycheck and a W-2, and suddenly I'm this private contractor because I'm going to make more money as a private contractor than I was over here collecting a paycheck. Unfortunately, that doesn't work. That's too much of a switch.
Yeah, if you went from W-2 to 1099, then that's that. And people shouldn't quit their jobs during that.
Not good, but they have done it.
Hey, I got a new job.
Yes. Without telling me.
Yeah, because they're going to verify that right before closing, aren't they?
Always.
Okay, gotcha. Okay, MOH. Does applying for a mortgage ding your credit the same way as applying for other types of credit? That's a great question.
That's an important question because this is my personal opinion, so bear with me. Somehow the nation has been taught that your credit is going to come to ruin because you're applying at more than one lender. Don't you run my credit. I don't want a hard hit.
Right.
What? Who made all of this up? the in a mortgage space, they want you to compare lenders, and they allow, without any major loss of points, to apply at several lenders if you want to, which is contrary to credit cards and other types of loans. So it's okay, you're safe. And even if you lose points, they're very minimal, 3 to 5 at the most. And my question is always what kind of problem is this if you can't give up 3 or 5 points on your credit report? What does that say the rest of the story there? So as far as I'm concerned, it does not ding or mess up anybody's credit to see more than one lender.
Exactly. Okay, that's great. A great question there.
For sure. Very important.
All right, PK, what types of mortgage loans does Centris Credit Union offer, and which ones do you have any kind of like deals? You know, like there's Knife out there. Is there any deals that Centris specifically offers? We had talked offline about this, and you said there was a pretty exciting program that you guys got going on for first-time buyers. Can you kind of elaborate on that?
Yes, I can. Besides, everybody, first of all, every lender offers the standard menu of conventional FHA and VA loans, and then some others have additional ones, USDA and so forth.
Sure.
We have FHA, VA, and conventional loans to be sure, and of course loans for construction. People are building houses, and people are buying investment properties. So we cover all of those categories. But one of my favorites right now that Centris unveiled last year is our first-time homebuyers program that we simply call My First Home. And it's geared totally to the first-time homebuyers. And here's a little tidbit, David, I want to mention that people forget. A first-time homebuyer is such when they haven't owned a home in the past 3 years. So it doesn't mean never owned a home, just not the last 3 years. You see what I'm saying?
Yeah.
So they could have owned a home in 2019, but let's say not since then. They fit into a first-time homebuyer category, and that is a great place to be, because our program has been designed as such to be able to those to qualify to purchase a home with $1,000 of down payment of their own money, $1,000. And I have been helping folks get into homes who have been waiting for who knows how long. And this opportunity has helped them to become a homeowner again.
Yeah, that's awesome. That's awesome.
So that's what's working for us, and it's been very well received, and it's helping folks get into a home, and it's helping agents to get an extra sale that might not have otherwise happened. So I'm excited about that. It's only a conventional loan, and that helps.
So they only have to come up with $1,000, and then closing costs. How do they work closing costs with that?
Everything else there is that's a cost is financed back into the loan. So to give you a specific example, the very last one that I just closed a couple of weeks ago, the buyer wrote an earnest deposit of $2,000 because that was required. But that was all he needed to come up with. He literally came to closing and said, "Do I need to bring any more money?" No, you don't. Your $2,000 earnest took care of everything. Now, if we can get sellers to pay any of their seller concessions, it's allowed up to 3%. That just means that the buyer will borrow less because some of those costs got covered by the seller. That's standard for all loans, and this loan is also no exception. It can be done.
Okay. What's the minimum credit score for that particular program?
That's a good question. And it is 660.
660. Okay.
That is the minimum credit score for that particular program. Yes.
Okay. Okay. And then what about you mentioned earlier investors? If somebody wants to buy an investment property, what are we looking for in terms of down payment? What's required for on the investment side if you're doing conventional and buying a rental property?
That's a good question. Most often that down payment is 20%.
20%.
I'm working on with somebody right now because she wants to buy a house for her daughter to be in the same neighborhood where she is.
Okay.
And, this is opportunity to get her daughter into home ownership, and perhaps down the road, the daughter will just buy it from her, or who knows what. But right now they have a plan, and that's why they're buying an investment property. The price happens to be $235 in a nice neighborhood in Willard somewhere. So
okay. And then what's, in terms of, just another question on the investment side, how many loans can you have? At one time, I think there was a rule like you could have 10 loans.
That is the rule. Still the rule.
At one time it was 4.
It's 10 now, at least at Centris. Maybe some lenders could have overlays and want to limit that. But at Centris, we allow for 10 financed properties, including your own. No more than that. After that, it shifts into a commercial lending category.
Gotcha. And as long as you're showing a positive cash flow where you see the lease and you see the rent, that's where they're basing that off of, correct?
Tax returns.
Tax returns. Okay. Gotcha.
2 years.
Okay. All right.
Here we go.
Okay. Clark has a question here. With an FHA loan, what is the typical percentage a buyer can receive closing costs wise? That's a good question.
I'm going to understand that. To me, that means how much is the seller allowed to pay on your behalf?
Yep.
Do you see it that way?
That's the way I'm reading that. Yeah.
Okay. And that answer is 6%.
6%. Okay.
On an FHA loan, yes. And that's more than adequate to cover quite a bit, as long as the seller agrees to that.
Okay. And then what about with VA? What's the limit on VA? How much can the seller pay for VA? 4%? 4%. Okay. And then conventional wise, how much can they pay on the conventional side?
Okay, we have to be careful there because there's a breakdown. Typical seller concession on conventional loans are 3%. But when a person is putting down 10% or more as their down payment, then that jumps up to 6%.
Gotcha.
Okay. And then we just talked briefly about investment properties. It's allowed there too. No offense, this is the one agents miss the most.
Okay.
It's 2%. It's not
2%.
3%.
Okay. All right.
Property purchases.
Okay.
The seller can come in with 2% seller concessions. Yes.
Okay. And then how much should buyers expect to put down as a down payment? Are there any low down payment options?
Yes, I mentioned one, but it's interesting that these down payments really do start as low as $1,000 and then just go up from there in different increments. $1,000, 3%, 5%, 10%, 15%. And each one of these breakdown or break points allows for something different to happen or to take place.
Gotcha.
There are reasons for each one of them, but you like we said, those first-time home buyers can get in with $1,000, but if you're not a first-time home buyer, then the minimum down payment, you got to have 5% to get you started.
Okay.
So it's all different.
Besides, my next question I got here is, besides credit score, what are the most important factors lenders consider when approving a loan?
Love that. The big deal anymore is affordability. So income. Of course, the down payment, the assets. In some cases, it's reserves to make sure you didn't spend your last dollar on getting into this house. Job history for sure. It's best to have a steady employment. It's best to have no gaps in employment, if you know what I mean.
Yeah.
And then the other thing that they like to look at, or I should say don't like, is that if there are clues when reviewing the income that it's declining for some reason. That's
Gotcha.
never good.
Okay.
Declining income for any reason just isn't a good thing, but increasing income is always good. What an average consumer doesn't know, and how could they, is that when you ask someone what their income is, they lump it all together.
Right.
Bonuses, the overtime, any kind of so-called shift differential, they just know how much they made last year or whatever.
Okay.
But here's another reason why that pre-approval is ever so important, because the income is looked categorically. All these different categories get interpreted. It's not lumped in. You can't just look at W-2 and divide it by 12 and say, here it is. No, it's broken down. What's base pay? What's commissions? What's bonuses? What's overtime? And so we talk amongst ourselves and say that pay stubs of today's population have gotten a lot more complicated and full of stuff that didn't used to be. You know, look at your pay stub and you'll see variety of categories. That's not how it used to be, but that's how it is now.
Gotcha. Now, when you talk about reserves, how much are you talking that people have set aside in reserve? What's some of the...
If necessary, it's at least 6 months. It depends on a category. 6 months worth of payments. It's not the most essential thing, but it does come into play from time to time.
Right. And I'm a big believer in making sure, you know, when people, they got to be able to afford the home after they're in it, you know, and if they face something, because it takes a lot more in terms of maintaining a home. That takes a lot of money. So you got to have the long-term. Let's see. Clark has a question here. With conventional, I heard as well that you can get up to 9% concession-wise if you put more than 25% down. Is that true?
I'm not aware of it. I'm so sorry. I don't know that.
Gotcha. Okay. MH08, my pay stub today is a full page.
I believe it. I see them all the time. As a matter of fact, that's why we constantly get continuing education, which is a good thing, which is necessary. So on Thursday, it just so happens we have a variable income review training.
Gotcha.
Because there's a lot of variable income out there.
How is, you know, like when you have a pay stub and you're putting money towards your 401k, how is that, how do they treat that on the pay stub? What are you looking at with that? Is that hurt you in any way, or does that, is that count against your gross, you know, monthly income? How do you guys treat something like that?
You know, they don't do anything with that. It's all about gross income. They're not adding or subtracting anything that's going into the 401k. But here, on the flip side of what I just said, there's nothing that's done to affect that piece of it. But you have to be very careful when looking at pay stubs to see if there's automatic garnishment for child support, alimony, or any other kind of a legal thing. That one will be considered additional debt, and it shows up right on the pay stub. You see what I'm saying? So that one does count. But
we got another question here. I'm applying for a NIFA conventional loan. I had a loan officer tell me there's no reason to shop around at different banks because the NIFA fees, rate, and terms will be the same. Thoughts on this?
Well, thank you for asking. I think be the same as a little bit of a global statement. Nothing is ever the same. The lender, I mean, yeah, it's the same from one lender to another that's offering a NIFA loan, sure. But if you were looking at a different type of loan, then there would be differences for sure. For example, we didn't even have a conversation, let's say just for example, you and I about, well, how does my first home program that's conventional compare to a conventional NIFA loan?
Right.
There's nothing wrong with the I think the conventional NIFA loan is a great product. It's a great loan. It's just right. But if you want to know, you would ask a question. Is there another program and how does it differ? It could be. So here's an example.
Okay.
For this particular question, it's a conventional loan. And one thing we don't know is, I don't know what the down payment is going to be here, but I can tell you the difference is it's usually a low down payment of at least 3%. And it will have PMI in your payment. So our Centris conventional My First Home loan has no PMI.
Wow.
I told you the guy bought a house with $2,000 and he has no PMI to pay. So there's something to be said about being informed and doing at least a little bit of comparison to see are there differences or are there not.
And kind of explain to folks what PMI is, because some folks might not even be aware about what that is.
So PMI stands for private mortgage insurance, and everybody pays that. That's putting less than 20% down. That's typical, that's standard, that's across the board, that's industry. Less than 20% down, you will have some sort of a PMI charge. And this PMI comes in different fashions, forms, ways of doing it. It's just that this particular program that we're offering right now has no PMI, so that saves folks money right there in a monthly payment.
Okay. Now, let me ask you this. Does for someone that's paying PMI, does their credit score affect how much they pay in PMI? Does that have any impact on how much they pay? And I've heard somewhere that the higher your credit score, the less you'll pay in PMI. Is that correct, or did I hear it incorrectly?
That's very true. If we talk about conventional loans, the lower the down payment, the higher the PMI cost. The lower the credit score, the higher the PMI cost. Gotcha. So the ideal PMI on a conventional loan is, if you will, ideal, or the smallest cost of PMI is 15% down and 780 or higher credit score. That's the ideal. That's like 10, 20 bucks maybe,
Gotcha.
20 bucks, let's say.
Okay.
But you are correct, David. The lower the credit score, it has a huge impact on how much PMI somebody will pay, which is the reason why we look at, can we do better? Can we find another option?
I've even had insurance agents say that credit score affects even what they're paying for insurance. I don't.
Yeah, me too. Yeah, even that.
Right.
So credit score is hugely important.
Hey, Fernando says, good evening, guys. I got my loan approved by PK. He's a great guy to work with.
What are the chances? Thank you, sir. Thank you. That's funny.
Okay. MH08 says, does PMI change if there's a change in credit score? That's a good question.
Change when?
I'm assuming the way I'm reading that question would be if they're paying PMI and if all of a sudden their credit got better, would it change at that point? Or once it's established, is that what it is?
Yeah, there you go. Once the loan is closed, the PMI has been set based on that approval, then that just stays that way.
Gotcha.
It just stays that way.
Okay. And then the next question I got is, what are the typical closing costs buyers should budget for?
Oh, that's a good question. That's important stuff. You will find that closing costs, there's different ways to interpret it, but really to me, the closing costs are the lender fees. The lenders charge, they have all these fees that are charged to put the loan together, and that's typically known as closing costs. And there's going to be a variation in what those are, anywhere from $3,000 on up and up. But in addition to closing costs, it's really, really important to remember that you got to have money sufficient for escrow reserves. Escrow reserves are a 1 year's worth of homeowners insurance premium. Anywhere from 6 to 8 months worth of taxes and 3 more months of insurance premium. So that adds up easily. Even just sitting here, it easily adds up very quickly to at least $10,000. I don't want to be discouraging. It's going to vary, but it adds up fast.
Okay. MH08 was saying if the score goes up, PMI goes down, and vice versa. We talked about that. That's what he was talking about there. And then, are there ways to reduce closing costs or negotiate lender fees?
That's a good question. You can always ask, but those fees are not just going to disappear and say, oh, well, no, gone. We'll take those away. We don't need them anymore. But this is my opinion now. You're letting me talk, so hear me out.
Okay.
If people, buyers, were just willing to go into this with an open mind, there's opportunities here to be learned. But the minds are focused on rate.
Right.
And once you close your mind to everything else and just look at staring at the rates, then you can miss out, because the lowest rate can still cost you a ton in a wrong strategy. So you gotta, the best buyer is the one who has an open mind and looks at the whole picture. But to be specific of how to make some of these costs, let's say, go away, which they don't, they are required to be listed. They are always itemized and listed, but the closing costs can be reduced with what we in the industry called premium pricing. What does that mean? On a even conventional or FHA loan, and maybe even on VA, if you increase the interest rate by at least 0.25%, that will take away some of those costs. It'll reduce them. So depending on how much do you have to increase the interest rate, by 1/4, by 1/2, by a whole percentage, that will determine how much closing costs will be reduced. Well, why would anybody do that? Well, you would do that because you're short on funds for closing, and because you might not be in that house forever. So it's better to go into a house with less money out of your pocket and with somewhat higher interest rate, as long as it's still affordable, rather than shelling all of your money out for fees. So it's possible, but you got to ask and you got to compare. If I'm going to take on a higher rate, what's that going to do for me?
Okay.
See what I'm saying?
And they could do the same thing. They could pay points and buy down their rate, correct?
And that's going the other direction. And the points are just called that, but really it's an additional fee that buys down the interest rate.
Right.
And then you also got to do some math and say, okay, well, if I'm going to pay a point here and I'm going to save $50 a month, how long is it going to take to break even for that extra expense, right?
Exactly. Let's see here.
So trust, find out who you want to trust.
Jen Sylvester, a friend of mine, says, hey, David. All right. And then Clark says, chatted with the lender today. She said it's better to pay points up front to buy down the rate than wait around to refi in this market. What would you say about this that in the current market?
Well, that's interesting. That's a nice thought. It's a nice theory. There's nothing wrong with it, but I still believe that one would want to consider the whole picture.
Right.
What expense are these points? What kind of expense is that causing you, and how much is it saving you every month, and how long will it take to just break even on that extra expense?
Gotcha.
If it's 2 to 3 years, it's not bad, but I often find that additional points can take anywhere from 5 or longer years to recover to just break even. Well,
Gotcha.
that's kind of questionable. We all have charts and things that show that
Right.
today's interest rate is not going to be this way for the next 30 years. It just
Right.
isn't. They all have a way of changing somewhere in the anywhere from 3 to 5% range. So I don't know that it's a hard and fast answer. That is somebody's opinion, and maybe that's okay, but it's a case by case basis.
Gotcha. Okay, Jen says the buyers need to focus on the APR and not the rate.
For example,
PK, can you explain what APR is? What
annual
APR?
percentage rate tries to encompass the costs, the total cost of doing this loan rather than just the rate. I mean, sure, the payment is figured on the plain interest rate, but the higher this APR is, that means the more you paid in fees and points and who knows what's. So that's why that's a good measure of things, and the government put that into place a long time ago. Thank you.
Awesome. Thanks, Jen. All right, I got another question here. Can you pay property taxes and homeowner insurance on your own, not through the lender? I'd rather have that money making interest in my accounts until it's due rather than sitting in escrow. That's a good question. What's the rule on that?
There is a rule for that, but that rule will also vary from one lender to the next, as was explained to me today, and I'll share that with you. So if that's something that's important to you, well, first of all, know this: conventional loans only, 20% down payment only. That's rule number one, 20% down payment. But then the lenders have their own rules under which they will allow for this to happen. And you always want to ask, if that's important to you, what's required to do this. So, for example, the customer that called me today that's dealing with another lender said they will waive this or do this for me, but they will also increase my interest rate. So that's one thing they do. Another thing is, and I've lived this a long time ago, there's an extra charge for this privilege. It's been 1/4 of a point, which depends how much it is in dollars. At Centris, our procedure is different. We neither charge extra points nor we increase the interest rate, but the underwriters absolutely insist on reviewing this asset statements to make sure there's still plenty of reserves left over after the transaction to be able to continue to pay that. And that's when they approve it.
Gotcha.
So it's not hard to get approved, but you got to show you have the money.
Okay. For those that relocate to Omaha, what are some key things to know about getting a mortgage in Nebraska?
That's I like that question. Here's why. So anymore, the way things are, that a lot of people are working remote. They can relocate to Nebraska all day long, be with the same company, but the question is asked, and the underwriters need proof that your company will let you move to Nebraska, stay with the same company, and so we need a letter of proof that says, yes, you can work remote and still receive your same pay. So that's one thing that happens. If you're completely changing companies, that's another story.
Okay.
But that is one thing that's become important that didn't used to be very common. So,
gotcha. Okay. All right. This next one, what are some financial do's and don'ts buyers should follow leading up to closing?
Oh, yeah. Well, yeah, those can be huge, and you've seen them, and I've seen them, and
I'm sure Glenn Clark has seen them as well.
Yes, I'll go real quickly. The don'ts are the biggest things. The don'ts are things like don't go getting new credit.
Oh, yeah.
No new credit cards, no cars, no credit of any kind. Do not close any credit accounts. Do not suddenly run up your credit cards because you're excited in buying furniture and appliances.
Oh, yeah.
Do not make major purchases right now. Do not suddenly do a debt consolidation loan. Do not pay off your collection. We talked about this before. Don't suddenly go become self-employed because you think you can make more money. Won't work. And do not move money around.
Yes.
Sometimes people think they're doing us a favor. Oh, well, I'll just move all my money now at Centris and it'll all be in one lump sum and it's easier.
Right.
But it isn't. The money has to stay where you said it is and where it was verified. There's no favors being done to anybody by moving money around. It just complicates things. So those are some of the don'ts real quick, like David.
Okay.
And don't quit a job.
Don't quit your job.
They have. People have done it.
And don't buy a car.
Ooh, I have heard stories. Didn't it happen to me, but it had to be done. Somebody did run up a bill with their furniture, and it ruined their debt-to-income ratios. They had to take it right back to Nebraska Furniture Mart and reverse the whole transaction. Don't do it.
Don't co-sign on a loan either.
Ooh, yeah, big one. Yeah, do not. Yeah. See, that's a whole another trap, if you will. We don't have time to talk about it, but how should I say? If somebody co-signing a loan for somebody else, don't think it's not your debt anymore. It's just theirs. If it's on your credit report, it's just as much as yours.
Gotcha. Okay. MH08 says, I work remotely and we also have GeoPay. Okay. And Clark says, yes, I have. And I say why. Okay. Fernando has a question here. What is required to buy an investment property?
All right. He's a little late, so we'll repeat it.
All right.
What's required is a good credit score and 20% down payment. And it's conventional loan only.
Okay. And when we say good credit score, what are we looking at for an investment property? What's the credit score on that?
The higher, the better. I mean, we can probably get by with 680 or whatever, but the higher, the better. Here's an interesting thing about investment property, since Fernando is asking, but applies to anybody. I've seen this, and I test it every time I come across it, is yes, 20% is required, but if you buy an investment property and you can put down 25%, your interest rate will be improved by 0.75% to 1%.
Wow. Okay.
With that higher down payment. I can't answer why. That's just something I noticed.
Okay. Okay. How can this is we just talked about, we kind of just touched on this just now. How can buyers improve their chances of getting the best mortgage rates?
Improve their chances? Well, to improve your chances to get the best that you can qualify for, I believe that to me starts with preparation.
Okay.
Let's get the process started anywhere from actually a year. If you do planning and preparation, you're going to go through all of this with the breeze. It's going to be seamless. It's going to be painless. And you're going to have options to choose from, not just lenders, but rates and PMIs and everything. But you've got to prepare and plan ahead. That's how I believe.
So seeing a home on Zillow and going out and seeing it on Saturday, and you want to buy it Saturday, put it in offer Saturday night, that's not the time to start the mortgage process.
Well, people do, but it stresses everybody out. But I'm just saying, you asked, how can they improve their chances? Well, education, preparation, and planning will go a long ways to setting things up. If that's your goal, you're going to make it a goal like anything else. This is going to be our year to own a home, let's say.
Right.
So it's never too early.
Right.
Because what a year's preparation does, it gives you a chance to put all these pieces together, and that whole pre-approval process also gives you a chance to find out if there's any holes, gaps, anything is wrong. Then you have a year to fix it, but not just fix it yourself. You know from an expert what it is you got to do specifically, and then you have time to work on it. And when the time comes, you're going to go right through it.
And then you also give them guidance on what what debts they should work on first, because that's a big deal, isn't it?
Absolutely. Yes. How to improve. I mean, I have lined myself up with a local credit advisor and helper to help people improve their credit score that I refer to. So, but that's part of planning,
Gotcha. Well, MH08 says, great guest tonight. Learned a bunch. This guy is interesting. All right.
How about the accent? Thank you very much. Thank you very much.
And if somebody wants to reach out to you, they could go right to we linked your website in the description, but they can reach out to you at 402-507-0066, correct?
Yes, that's the easiest, really. That's my cell phone. I answer by text. I answer by phone call. If I'm busy, I try to get back as quickly as I possibly can. But
excellent.
We all have lives, stuff is happening, but I will make it a point to call you back because, for what it's worth, David, no offense, I learned this from Van Deeb. Call your people back as quickly as you can. He does it, and he's the busiest guy I know, and yet he returns phone calls quickly. So I try to do the same.
Right. No. Final question that I have is, and we have time for more if anybody has any more questions. But sure. What's one piece of advice you wish every home buyer knew before applying for a mortgage?
Piece of advice. I think it's some of the things that I've said.
Yep.
Plan and prepare.
Yep.
Don't go into this rushing, and be open-minded to receive instruction and education. It doesn't, it's the human nature to compare to at least 2, maybe 3 lenders. More than that is just overkill and repetition. But at least between the 2 lenders, and see what you learn from each one, and make sure your mind is open enough to go just beyond rate. I wish people wouldn't ask, what's the rate? I wish people would ask, what is the best loan program that you have for me as a first-time home buyer to get me into a house?
Gotcha.
What's it going to take? What do you have? And that's where, our special programs come out then. NIFA, or My First Home at Centris, and so forth. But it goes for anything. What's the best program you have for me to get into my next home or my first home or anything? And then
also talk about, in terms of, this is a team effort, in terms of when the lender needs something and they request something, talk about how important it is that you get that to the lender.
Thank you for that. Yes. We are not asking for bank statements and all the pages of bank statement for a sport because we feel like it, but it's because what comes after us is these people that we call, I don't even like them, but they are essential. There's these people called the underwriters, and they want things just so. Why do they want things just a certain way? Because the government insists that we all do things a certain way. And so after the underwriters come the auditors, and all of those people, they're just looking at paper and evidence. They're not talking to anybody. And all of this evidence has to be in line and precise as to why some loan was approved. And that's why everything that any lender ever asks you for really, really is essential. And it is best to be delivered as quickly as you possibly can.
Yeah, and you also the agent needs to work with you to make sure you get all the addendums and everything else. Way, it's a team sport, and that's
it is.
It is. Communication is key, and you learn that through the hard way. And
totally.
That way you don't want to. You want everything to work out and close and everything. So that's right. Any more questions in the chat? Oh, let's see. Evidence makes it sound foreboding.
Didn't mean anything. I was just trying to say there's rules on top of rules,
Exactly,
and you
because
can't escape them.
it's a heavily regulated industry.
Yeah,
You're a
that's
heavily regulated industry.
it is.
Let's talk about appraisals.
Oh, mhm,
Talk about the appraisal process
mhm.
and take us through, like with an FHA appraisal and they require a repair to be done. Talk about that if you don't
Mhm.
mind for a minute on that.
Sure. So appraisals are required by all lenders, all loans, and they're mostly there to evaluate and confirm that the value that's being paid for the property is appropriate and it'll appraise for the value. Um, the sometimes the appraisal is confused with that the appraisal will show up what all needs to be fixed.
Right.
Not really so much. The appraiser is looking by certain rules and regulations that the house is not a health hazard of some sort,
Right.
that it's move-in ready, that the foundation is sound, and
Yep.
that there are no health hazards, safety hazards, or anything like that. That's what they're looking for. Should they spot something that's
Mhm.
obvious, the appraiser will not say, see this, fix it. They don't say that. They are taking photos of pretty much everything, and then they make a recommendation
Okay.
that a qualified contractor needs to examine this, let's say a spot on a ceiling or somewhere to make sure that the water is still not leaking, for sake of example. So they make
Gotcha.
those kind of recommendations, and then it's the underwriter that has to make the final call as to what all is going to be required.
Oh,
No offense to anybody, but a conventional loan is not a shoe-in for
right.
loan approval
Right.
and for just dismissing anything and everything. It
Right.
just doesn't work that way because of those other.
Because the conventional loan they can still call out something with a conventional loan.
They
So
could. They really,
yeah.
really could, and they have. But FHA is a little bit more particular. I had I had a whole list of. Well, actually, I published it once. A whole list of what the appraisals, FHA appraisals, look at. But
Right.
some of the things are pretty self-explanatory. The peeling paint,
Yeah, that's a big
you can
one.
tell if it
Yep.
is or isn't peeling. The handrails, if there are steps,
Handrails.
it's
Yep.
obvious. FHA doesn't like broken or cracked window panes.
Right. And
And on it
they
goes.
want windows that when they open, stay open and don't
Yeah.
smash the little kid's hand, and
For
garage
example.
door
Yeah.
retractors that retract. That's another
Yeah.
one that I've seen. And
Yeah. You're correct.
tripping hazards.
Dripping hazards, right?
And that's kind of a complete wild card, because sometimes I'll look at a driveway and you'll see, you're like, okay, I wonder if that's going to pass. It depends. Every appraiser is different. You simply don't know. Some are going to call it out and some don't. Sometimes
Yeah.
it's just, but
And then, but it, like you said, but then it all still goes to the underwriter, and that's where the final call is going to be made.
right. And I've had where the appraiser took a picture of an oil tank in the basement. I've had, and now you got to go through have you've had that one before, haven't you? The oil tank in the basement.
No, I'm sorry.
Yeah,
I don't recall.
I had an oil tank in the basement, and then they had you have to have an EPA certified person sign off on it.
Mhm.
Yeah, it was, yeah. Clarkson.
One of the common things that can happen that's related to foundation, I've had this happen. They may require a structural engineer.
Yeah.
If they do find walls that are bowing or whatever, they may want to know to make sure, or cracking foundation, they may ask for a structural engineer to inspect that to make sure it's safe. Seen that.
All right. Ben says, sorry, David missed 7 p.m. Okay, that's okay, Ben. Thanks for tuning in. Let's see. MH08, my first appraiser gave me $15,000 for the view. The second appraiser said, what view?
Okay. There you go. We have no control of that.
You simply don't know, the appraiser, it's like, well, sometimes you just cross your fingers with that value. Sometimes you don't know how that's gonna I appreciate that. Well, hey, I tell you what, PK, I really enjoyed this evening. I learned a lot. Hopefully the folks that watch this and then watch it in the replay will get something out of it. You've been a great guest tonight. We learned a lot. And then, like I said, if anybody wants to reach out to you, they can go see the link in the description and reach out to you. And then any final words or anything else?
Thank you. Still, my word is just prepare. Give yourself time to absorb all of this and prepare ahead of time. Any kind of real estate transaction that you're considering, whether it's your first home or whether it's your move-up home, life happens, life changes. Do some planning ahead, and especially buying, investment properties. Study, learn, talk to people like me, and get your own, real estate 101, if you will. Instead of large group is good, but after you hear so much, at some point in time, you got to choose your real estate agents, such as David and such as me, and trust us and let us give you guidance and direction, what works, because we're going to work in your favor.
Exactly.
It's not too old, been around too long to just chase commissions or whatever. I want to help people. Because this is a complicated issue, as you can see.
Sure is.
A lot of moving parts.
No, but I really appreciate you being on tonight. We got a lot of great information, great interaction in the chat, and then appreciate the folks that show up, MH08 and Clark and Jen and Fernando and Bob Handy 91. Thank you very much.
Thank you.
And then PK, thanks again. I appreciate it. We'll have you on in the future, because this is a great
Let's
topic.
do it again. Let's give it a few months and see.
All right. Hey, thank you very much. All right.
Thank
you bet.
David.
Bye.
Bye, all.
Oh, I cut him off there. All right, everybody. Well, hey, and don't forget, do me a favor and hit the like on the thumbs up button. And if you don't mind subscribing to the channel, I really appreciate it. Hopefully we'll see more of these live streams. Hopefully you're getting some value out of them. So anyway, I'll see you guys later, and stay tuned. Bye-bye.